Hi guys, hello, welcome. All right, so this is going to be a relatively short video, but I just wanted to share my thoughts today. I came across an article by African Business, and in the article they were talking about how there has been a recent reduction in the funding to tech companies on the continent, on the African continent, and there were all these different stats. I'll go over them with you in a bit, but it sounds like really bad news. However, I think it is probably the best thing that could happen to this continent. And all of that information is on the article. And I'll put it in the link in the comment section. But and the article also agrees with me, but this is great news. So first, I will begin with the stats, right? So total venture capital, so VC funding has, you know, this past year we secured about $2.6 billion. However, that was a decrease, showed a 22% decrease from the prior year. Deal volume has gone down by 28%. So just 427 deals were struck last year. When it comes to venture debt, there was actually an increase in the number of, debt in terms of capital that was taken on by companies, detailing 60 deals totaling $1 billion, right? So all of that is just saying so the funding value fell, so less money being put into tech startups on the continent. Number of deals are happening less, so maybe there were 400 happening before, 500 deals happening, 2023. Now they're just about maybe 300 and something happening, 380 if you use the percentage. The fintech sector is still dominant. However, there has been a shift to other sectors, which is a good thing in my opinion, right? So I'm going to talk about why I really think this is good for us. I think about it more so as, let's say there was a situation, right? So maybe you are a student in college or university, and for the longest time, maybe up to your second year, your parents are funding you, they're paying for your clothes, they're paying for your trips, your little, adventures with your friends, and all of a sudden it stops, right? They cut that funding. Now you still need to be able to afford those things like clothes. Maybe you're renting a place off campus. You still need to be able to buy those things. So what do you have to do now that you're not getting the money from your parents? Go get a job. Go get a job, go find another means of income. And now you have to show up in a different way, right? So you first have to go get a job. You have to become more independent. You have to better manage your finances. So track where your dollar, naira, Hula is going. You need to be creative with how you're spending, right? So you can't, waste it on stupid stuff like you used to before. You can't just, blow it on maybe, the best Nike shoes in the market at the moment. So you have to be more focused, more creative. And then you also have to figure out how to multiply the small resources that you have now, right? And eventually, if you follow that track of mind or that journey, you could end up becoming like your parents, like your mom and your dad who was originally funding you. So I think that's what's happening to us at this moment. Because of the reduction in the number, first of all, the volume of money that's being poured into tech startups, and the number of deals reducing, it has led to higher quality deals. So meaning that investors are more careful, they're more selective where they're putting their money. So they're putting into really good startups with really good founders who are credible, who have proved themselves, who know what they're doing, have a good hand on their business, and they understand their market and they understand their idea and they're executing properly. There's been a sector diversification, right? So beyond fintech, we heard about all the flutter waves, all of the hype there, which is great, but now we're seeing a shift into clean tech, into climate tech, into AI. Actually, AI came out as one of the top funded ventures as of last year, which is great news for us. It might be a way for us to bump, sort of. I mean, I'm talking about the reduction in investment, but that might be a new sector where we sort of increase investment in the years coming. There's been, like I mentioned before, an increased use of venture debt, right? So whereas before, a lot of African startups were leaning on investors and equity as a way to fund their businesses, now they're becoming smarter. Now they're looking to more different financial instruments, meaning that they are now becoming more sophisticated in the analysis of risk versus ownership and really thinking hard about their business model, especially when you're trying to take on debt. Now there are more African investors involved, and this is what I'm really excited about, right? So now, because of the reduction in foreign investors coming in, maybe not because of, but what we've seen with the reduction in foreign investors, we've seen African investments living on the continent filling up that space, right? So Africans are now investing in startups in Africa. So it means that now we are putting our money into the startups, which means that if the startups, are successful and they bring returns, those returns go to the African investors that live in Africa, contributes to the African economy, contributing to African markets, helping our infrastructure, etc. There's a lot of multiplying effects of that one action that I think will pay off in the long run if we keep it up. And just at the end of the day, we just become more resilient. We've had things like inflation, high interest rates, global insecurity, all of that. With all of those things happening, um, it becomes more important now than ever for Africans to own Africa. And there's a lot of things you can read into that statement. But what that means is that we need to be more in control of our region, more in control of our finances, more in control of the instruments that we use on the continent. Because if there's a war happening outside or something that just shakes the global supply chain or global system, and if we are too dependent on the outside Africa, on the global structure, maybe Americas and Europe and Asia, we will be significantly affected as opposed to if we had more dependence on ourselves, we'd be better able to weather those storms. So I'm so excited. I'm not so happy. I sympathize with some of the startups that were probably looking to expand and whatnot, and now they have to be more strategic and they have to lean into other models and be more creative. But at the end of the day, I think it is to our benefit that something like that is happening. So always happy to talk about Africa, talk about technology on the continent. Didn't talk about AI this time. I think I mentioned it, but always happy to see what's happening on the continent and to talk about it. If you have any questions, please let me know in the comments. Things you want to challenge, things you want to probably add to. That's always looking to learn more. So thank you, and I hope you have a wonderful day. Take care.